SpaceX is no longer just a rocket company. It is an ambitious bet on a future where the entire planet and the space surrounding it are wrapped in a trillion-dollar digital web. On a clear day at Cape Canaveral, the sight of a Falcon 9 rocket piercing the atmosphere has become almost routine, but the cargo it carries, specifically the Starlink V2 mini satellites, represents a fundamental shift in how humanity will interact with data. Elon Musk is moving beyond simple connectivity. His vision involves launching up to 1 million satellites that will function as distributed cloud servers in space. These orbital data centers are designed to harness solar energy directly, processing massive artificial intelligence workloads far above the constraints of Earth's atmosphere. To achieve this scale, Musk has even suggested the need for a satellite factory on the moon. However, building this orbital empire requires an unprecedented amount of capital. And that is where the potential for a SpaceX initial public offering enters the frame. At its core, SpaceX has evolved into a highly profitable satellite communication and launch business with a significant lead over any potential rivals. Recent reports indicate that the group generated approximately $8 billion in earnings before interest, taxes, depreciation, and amortization last year. This was achieved on total sales ranging between $15 and $16 billion. Starlink, the satellite broadband division, is the primary engine of this growth, accounting for anywhere from 50 to 80% of the total revenue. With 10 million subscribers worldwide, the group maintains a profit margin of roughly 50%. This is a staggering figure for a business that essentially functions as a global broadband provider, outperforming the margins of traditional terrestrial telecommunications companies. The recent merger with the artificial intelligence startup xAI has pushed the internal valuation of SpaceX to a massive $1 trillion. At this price tag, investors are betting that the company will capture a dominant share of the global telecom market. Yet the reality of the industry suggests a more nuanced path. Satellite connectivity is currently a complement to conventional networks rather than a total replacement. Most consumers in developed urban areas still rely on fixed-line broadband and high-speed mobile networks like 5G. The true demand for Starlink comes from the massive gaps in the global infrastructure, reaching people and industries in locations where traditional telecom companies find it too expensive or difficult to operate. While SpaceX currently enjoys an effective monopoly, this market is becoming increasingly crowded. Amazon is moving forward with Project Kuiper, having received approval to expand its planned constellation to nearly 8,000 satellites. With hundreds already in orbit and a full fleet expected by 2029, Amazon has the deep pockets and the logistical infrastructure to challenge Starlink's dominance. Furthermore, China is developing two separate low Earth orbit networks. One is dedicated to government and security functions, while the other targets international customers. These state-backed efforts could involve tens of thousands of satellites, creating a formidable alternative to Western technology. The competitive landscape is not just about technology, it is also about cost. Amazon is designing its user terminals with low production costs as a priority. If they can undercut Starlink on the price of hardware, they could quickly gain a foothold in price-sensitive markets. Beyond commercial competition, SpaceX is navigating a complex geopolitical minefield. The conflict in Ukraine highlighted the strategic importance of Starlink, but it also revealed the risks of relying on a single private entity for national security. Reports that satellite access was used as a bargaining chip in international negotiations have unsettled allies. In response, European nations are seeking sovereign alternatives. France has invested over $1.5 billion in Eutelsat Communications, the operator of the OneWeb constellation. Germany and Italy are also exploring their own secure satellite systems to ensure they are not dependent on a foreign provider that may have conflicting interests. Internal risks are also mounting. The merger with xAI exposes SpaceX to the volatile world of generative artificial intelligence. Financial documents show that xAI has faced significant losses, burning through billions of dollars in cash within a single year. This puts immense pressure on Starlink to maintain its growth trajectory to subsidize these ambitious AI ventures. Additionally, Regulatory scrutiny is intensifying. Multiple jurisdictions are investigating the Grok chatbot for its role in circulating controversial content, which could lead to legal and financial headaches for the parent company. Valuing a company with this much complexity is a challenge for even the most seasoned analysts. If we attribute 70% of the $1 trillion valuation to Starlink, the satellite unit alone would be worth $700 billion. To justify such a number, the financial performance must be extraordinary. Current estimates suggest Starlink could bring in $16 billion in revenue this year. This implies a valuation multiple that is far higher than traditional telecom giants like T-Mobile or Verizon. In fact, it places Starlink in the same speculative territory as high-growth tech firms like Palantir. For the $700 billion valuation to make sense by the end of the decade, Starlink would likely need to produce nearly $40 billion in annual earnings. Even the most optimistic forecasts from major investment banks suggest revenue might only reach $50 billion by 2030. Leaving a significant gap between the current hype and the projected reality. The path forward for SpaceX is a high-stakes balancing act between revolutionary engineering and the harsh requirements of the global financial markets. Musk is betting that the integration of space hardware and artificial intelligence will create a new category of infrastructure that the world cannot live without. But as competition intensifies and geopolitical tensions rise, the company must prove it can turn its orbital dominance into a sustainable and stable financial empire. The coming years will determine if SpaceX can stay in this high-altitude stratosphere, or if the gravity of competition will pull its valuation back down to Earth. While the technical achievements of SpaceX are undeniable, the company now faces the ultimate challenge of proving that its astronomical valuation can survive the gravity of financial reality and global competition. Thanks for watching.